Hello, everybody. Welcome to the webinar. We'll get started here in just a moment. My name is Troy. I'm a senior account manager with AvaTrade. I'll be leading the technical analysis webinar here today. As we get going, let's do a quick systems check. Just type OK in your chat box if you're hearing me clearly and seeing my screen all right. All right, great. Thank you. I've got enough responses. If there are any issues as we go along, just let me know. I'm happy to make adjustments. As we get going, keep in mind all investments have risk. There's no guarantee that any one trade is going to win. You obviously want to manage your risk in a way that makes sense, that you can handle losses on any one particular move. But the idea is obviously to profit in the end in the bigger picture. Now, you can read the full risk disclosure statement on AvaTrade's main website, and that's always there for you to take a look at. Keep in mind that as we go through things, it's from an educational perspective and is not meant to be financial advisement. As long as we're talking a little bit about risk, keep in mind that on the AvaTrade Go mobile app, that we do have a special feature called AvaProtect that's available to protect against losses on assets like gold, silver, and FX pairing. So it's something, if we have time, we'll take a look at that maybe as we get going when we look at some of the fundamental news. Now, technical analysis, basically we can look at technical analysis Oh, sorry for the delay there. There's a little bit of a technical issue. Okay, sorry for the technical issues there. There was a little bit of noise in the background I was trying to take care of. Thank you for sticking with me. So technical analysis can be looked at from a couple of different ways. Now, there's technical analysis that we might call manual methods of technical analysis. And then there's also technical analysis that involves indicators, with the technical analysis maybe being done for you by different indicators and settings to give you some ideas about technical entry points. And we tend to lean more heavily on manual methods of technical analysis and take a look at indicators on occasion for maybe some extra clarity. Now, as we go through, if you have any questions or anything, please don't hesitate to interrupt. We can go through things a couple times over, maybe work on different terminology if there's something that goes over anybody's head. And feel free to give some suggestions, some input as well for things to go over as we go through the charts and work on strategy concepts. We can start out by taking a look at something I mentioned as we're going over the risk management aspect as we're starting the slideshow. You can see on AvaTrade's main website that there's an option on our AvaTrade Go mobile app called AvaProtect. And the app is very nice for some different risk management features and reasons. We can take a look and see that your margin is calculated for you in terms of margin requirement as you're setting up a trade. You also, if you put your take profit and stop loss, the AvaGo app will calculate what your exposure is, what your take profit amount is in your account currency. It'll list it next to your take profit and stop loss settings before you ever place the trade. So it gives you a good idea about your risk management and kind of acts as a calculator as you're setting up your trade in the order window, which is very nice. So if you haven't checked out the AvaGo mobile app, I would encourage you to take a look at it. It's a nice tool. And the Ava Protect feature, specifically on the AvaGo app, allows you to pick some time periods, whether it's by the hour or by the day, to protect against any losses during that covered time period. And they're added back to your account, and you just pay an upfront premium for that coverage, for that protection. And so it's a nice feature you can check out. If you have any questions about it, speak with your account managers. Now, a quick look at the fundamental news before we get on the charts to do the technical analysis. We see there's been some mixture between fear and optimism through the day. I would say leaning to the side of fear, building as the U.S. Open is coming here in about an hour and a half or so. The U.S. markets will open up, and the banks have been under some pressure regarding dividend payments to their stockholders, that sort of thing. Some caps have been put on them because the feds in the U.S. don't like the look of things in terms of the overall environment of risk and such. And so that's maybe weighing heavy on the bank stocks right now, and the indices in general, creating some bearish feel to things. And so as we take a look, there's another headline on Reuters about the same thing: Fed Reserve caps bank dividend payments. And obviously this sort of thing is related to the environment that was created with the global pandemic. And so we're also taking a look at some of the general announcements that came in today. They were mixed, some mixed news out of the European Union, some better than expected news, some worse than expected news. And then we've got some announcements coming up out of the US, and it involves personal spending, personal income, consumer sentiment, all kinds of different numbers coming out that could get a feel for what's happening with the economy right now. So you could see some swings in either direction today. As we look at the volatility index, it's been pretty flat, and the futures are mixed, a little bit red, a little bit green. So the markets are kind of on the fence right now, trying to find direction. It does seem that there's a bit of fear trying to build in the markets, though, as we see some of the bigger headlines that are going on. And so there's a kind of a bad news story for Nike. They had some surprise losses that were reported, so that's weighing a little bit on the stocks as well, on the indices. And so with that in mind, then we go and we take a look for some potential entry points on the charts. And so one thing I was looking at prior to the start of the webinar was just taking a look at what was going on with the Australian dollar compared to some of the major indices, and specifically the Australian dollar against the yen. One thing to keep in mind, if we expand the Australian dollar, this is 1 hour candles. We could look at 30-minute. Why do you think the Australian dollar would be dropping against the yen today? Muhinda, I don't know that we're going to get into moving averages so much today, but it's something that maybe eventually we could do. There are a lot of indicators that are using moving averages. So we see the Australian dollar has been pulling down against the yen. Yeah, it's kind of a risk adjustment, right? Stephen, you're mentioning risk. The yen tends to strengthen when there's fear in the markets, and the Australian dollar tends to weaken if the outlook of the major economies, especially China, maybe are a little shaky. And so because Australia is a big export nation in terms of iron ore and coal, etc. So the Australian dollar dropped pretty much all day today against the yen, and it found some support down here. Okay, support. Makes sense that the drop paused about here. But what was interesting, if you ever do cross asset comparisons, if you look at the Australian dollar and then you look at the S&P 500, you'd say, looking at 30-minute candles, if we go back just an hour and a half, we could see that the S&P 500 had reached a resistance point. And the fact that the S&P 500, a major indice, was at a resistance point, it was pretty predictable that it was going to drop off. Had you had a sell limit pending order waiting up here, as this reached that resistance, why would you, looking at the Australian JPY, why would you believe in this downward movement? Why would it have made sense to sell from that resistance on the S&P 500 or some of the other major indices that look very similar to this? What did the Australian dollar clue in for you with its downward movement all day? And then the major indices had caught a resistance level. Yeah, exactly. Some of you are saying when there's a lot of fear in the markets, indices and stocks many times tend to push down as well. So the fact that the Australian dollar already was pulled down by the yen might have clued you in that you could trust this resistance level and for this movement to drop down off of that resistance. Okay, that movement still could maybe be something that you believe in, right? Your stop loss, if you were going to sell on this now, where might you put your stop loss? If you were going to sell on the S&P 500, might be a little late for some of you's taste, but if you were still going to sell on this and maybe take profit at the first support level down here, you still have quite a distance to that. Yeah, just above the resistance, right? Above this resistance here. So your stop loss might be right up here. Even getting in late, that's about a 1-to-1 ratio. If your stop loss was above the resistance, your take profit is down here at this first support level, that's almost equal distance. So it's a 1-to-1 ratio. At least then you've confirmed a downtrend already. But I really liked this setup about an hour and a half ago as I was checking out charts before the webinar. I was hoping it would hesitate and wait a while before making its move so you all could see a nice technical entry point. But hey, it made its move quick as I was expecting this resistance might hold. It held quite well and got quite a strong bounce down. So that's an example of a great technical entry point with the direction being picked by another indicator that tends to move in the same direction as the second asset. Okay, Australian JPY tends to be dropping when major indices drop, and if it's out of balance, you see one made the big move first and the other one didn't move yet. Sometimes that clues you in that maybe you could take advantage of a nice entry point and go after that, like we're seeing here. Okay, and we could compare other major indices like NASDAQ, also dropping off the resistance, like DAX, dropping off the resistance, the Nikkei, not as nice of a resistance line. This was a little out of whack here. They had a strange movement a while back, but in general, dropping for the last hour and a half. This was more of a head and shoulders setup with one weird spike right here that occurred. Not today, but it occurred this week. Now, let's look at some other assets then. As we see, the major indices all look similar, moving down right now off of some of them what were nice resistance levels, others less clear in terms of resistance levels. There's the head and shoulders here on the DAX. Resistance, 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 right down. Okay, so let's look maybe at oil and see what's happening there. Another predictable move, right? What tends to happen to commodities like oil that are economically driven if there's fear that there's economic trouble ahead? What tends to happen to an asset like oil if there's expected to be economic slowdown? Yeah, it tends to go down. It's pretty predictable, right? So at the same time that we saw the Australian JPY had already got pulled way down, just an hour and a half ago, oil wasn't down yet. So it's the same type of move, the same type of reasoning why you would have expected this plunge, okay? And if we expand oil a bit, we can take a look at the bigger picture, okay? And we've looked at this over the past weeks. This gap was from a while back when oil first made its big plunge. And we can take, type okay if you're hearing me all right. I've got someone saying they can't hear. All right, great. It's just the one person, thank you. All right, good to go. All right, so we can see this gap from a while back. Okay, this was around the time when the oil really took its big plunge. Okay, we can see we've been talking for the past weeks about trading through this gap. These are one-day candles. Once it broke into the gap between Friday's close and that next week's open on Sunday night, that's a gap. Once the movement re-entered the gap, it filled the gap. Once it hit the top of the gap, that acts as resistance and it went back down. Once it hit the bottom of the gap, that acts as support and it went back up. Once it hit the top of the gap, it acted as resistance and it's worked its way back down about halfway through that gap. We're right in the middle of that gap right now. So do I think that it will continue to the bottom of the gap? It's possible, right? It doesn't mean it has to continue all the way down. Right now, we're kind of stuck right dead center of that gap. That's not necessarily the best entry point, right? And I've got someone else saying they can't hear the presenter. Audio is okay, I'm telling the Lassie. Okay, so but we do see in the near term on a scalp type move, this was predictable off this resistance. Remember, this resistance is the top of the gap. This area is near the top of the gap up here. And so this drop with today's fear off this resistance level, somewhat predictable, that type of movement down. Okay, so I don't see the entry point right now necessarily as that advantageous in terms of technical analysis. Why? Because we're right in the middle of the gap. Okay, for small moves, hey, there's a lot of downward momentum here. If oil jumps back up to this resistance level, this was support, right? Support, support, support. It just broke through the support. If this comes back up to that broken support, that theoretically could act as resistance. So what kind of pending order would sell from up here if oil comes back up to that broken support level? If you were wanting to sell from this support, you could put a pending sell limit that if this bounces back up to that price, you could sell. Okay, so you could start to work technically here that, okay, it's a downtrend. We can see it's a downtrend right now in the short term. It just broke this support level on the 15-minute candles. So you could start looking at it and saying, hey, if it comes back up, I might sell from up here. Now, if the pending price that you want is too close to the market price, it might not let you put a pending order. So you might just keep your eye on it. If it gets near a resistance level you like, then you've got a second chance at shorting it if you think it'll continue to drop. Okay, that's one way you can work this sort of situation where the breakthrough in the large move already occurred, and you could wait to see if there's a pullback to get back in if you believe in the bigger movement. Okay, so Luazi, there is no audio for the attendees, just to listen, not to talk. You can only communicate through the chat. Okay. All right, so there's a nice movement, nice opportunity, I think, for some scalping on oil. I believe you'll see some bouncing around still as the US market hasn't even opened yet. Okay, and as we also looked and we saw, there will be some announcements soon in about 12 minutes or so. Some pretty big announcements out of the US about consumer sentiment, retail environment, etc. Okay, which could cause some big jumps in some of these assets also. So some really big potential. Now, if we look at gold, and let's maybe look at 1 hour candles, we can see a pretty good support level here. Okay, right about here. This was resistance, resistance, resistance. And then once it broke through, it became support with some wicks testing it, right? But overall, this is a support level. You can see it. So, you know, if gold breaks this support, technically speaking, at some point, that could be a move that could be larger. And also, if it gets on the support and starts to uptrend, at some point you might like the idea of bouncing up off the support. Now, if you're trading a 1-2 move here, you can buy off the support with your stop loss down here and have a pending sell stop in case it breaks through to get out of the buy and you get in on your sell down here. This certainly looks like a decision point in the market. It came rushing up with a lot of steam and stopped right there. It became resistance, and then it took a lot of energy to break through, and it became support. Okay, so this is a somewhat important price level, technically speaking, that you might be interested in maybe putting some pending orders around, or if you're watching it when it reaches the price that you like, to do a market move and maybe back that up with a pending order. But gold looks like today it might have the opportunity and through the weekend to have big movement. And when I say through the weekend, I mean to gap. After today's close, to have a big price movement when the market opens Sunday night / Monday morning. Just be careful with your exposures on that, because carrying trades through the weekend on something like gold, if there's a large gap and it gaps your way, great. If it gaps against you, you got to be careful on that. Okay, so gold looks pretty interesting on the 1-hour candles there. There's an important price level very close with gold, right around 1758, that you could put some potential moves above and below to get in and out of movements with limited risk, with a much larger potential profit if the movement went back up to the resistance or down to the next support level. Okay, so getting in near this price level, it's a small risk to get to the other side of that price level to a stop loss, but a much bigger potential profit if it makes that run back up or back down to those next price levels. Okay, natural gas, sure, we can take a look at natural gas, Ashton. Let's take a look. Okay, and here we see on the 1-hour candles quite a drop in natural gas going back to Monday. And we see coming out of last weekend, the price gapped up from the 19th through the 21st. And then through this week, we see oil working its way down. And, you know, hindsight's 2020, right? But a simple pending order strategy, you see a big gap. What do we say many times with a gap? If a movement re-enters a gap, what happens many times? And I could speak directly to you, Ashton, or to anybody else. If a movement re-enters a gap, what did we see with oil? Many times it refills the gap. Okay, not always, but many times. And we keep seeing it over and over in the webinars. So you can see when we say many times, we're not just making that up. So here's the support level then, because this was the top of the gap. If you had a pending sell stop here, once it entered the gap, it sells from your pending sell stop order. So once it broke through and hit your sell stop, it would have sold, and down it went. And look, your first take profit spot would have been maybe once it filled the gap. And look, right on cue, once it filled the gap, it found support, right? Support, 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 support. If it breaks below this bottom of this gap, which it did today, right? And or I should say a couple days ago, earlier this week. If it breaks below the bottom of the gap, this is a support level. What happens many times once a major support level is broken? Technically speaking, since this is a technical analysis webinar, if the support level gets broke, and this is an important support level, it's the bottom of a big gap. If that support level gets broken and the movement drops below that, what happens many times? It becomes resistance, good, perfect, Peter. And also you tend to get a large movement many times because it took momentum to break that support. Once it broke, many times you get a large movement. And that's exactly what we had. So not only could you have traded a sell stop to fill the gap, you could have also had a pending sell stop if it broke below the gap. And once it broke below the gap, boom, that triggers and you have another big win. Okay, so this was going on all through the week, and it formed another support level here, right? Support, 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 another pending sell stop, boom, it breaks and it plunges again. Okay, now you could have said, well, what about, shouldn't I have bought from the bottom of the gap? When this came down and hit the bottom of the gap right here, you might have had a pending order to buy. And I say, yes, that one you would have lost on, right? So 1 out of 3 or 1 out of 4 in this example, using support and resistance and trading around the gap, we would have lost 1 on these examples. Because if you're going to trade down when it entered the gap, you're probably going to trade up once it hits the bottom of the gap, since this should be support. And it tried to go up a couple times and didn't go. It never refilled the gap back up, and down it went. And it would have hit your stop loss just below the gap. Small loss, right? And you'd have gotten in the other direction with your sell stop. Because again, when you're trading based on technical analysis, you're not trying to guess the market. You're not trying to say, I think it has to go up, I'll only trade up. A technical trader is trading up from this support. Stop loss down here. If it breaks the support, you're trading down. Okay, I lost on that one because it reversed and broke the support. I won on that one. It breaks the support, I win on this one, huge. This one entered the gap, I win on that one, right? So, and by the way, when this got down to the beginning of this gap here, you might have traded up because this starting point would be support. So once it came back down to that spot, you might have traded up and took a small loss when it broke. And then you get in on the sell to fill the gap, and you have a much bigger win than what you lost trying to buy off this support. So you have 1 loss, you have 1 win. But guess what? Even with that 50% win percentage, with this setup, you'd be up. Okay, you buy up off this support, that one lost. You sell because it broke the support, that one wins. Again, 50% success in that example, but a much bigger win on the one that was the true movement than what you risked on the one that was not the right movement. So again, when you're trading technically, you want to trade smart. You don't have to be right, you just have to be smart. Okay, and that's what these entry points are all about. And so now we're looking at another support level down here. I see the support. It formed, support, support. This is where you get out. Maybe on this sell stop, it plunged, it stabilized sideways. Okay, take your profit if you're a scalper, right? If you're not a long-term trader. And so now this becomes support, and it's trying to break this support. What could you put down below this support level in case it breaks the support? Just like here, it formed support, sell stop gets in, you win. It forms support. You could put another sell stop below this support. If it breaks it, you could try it again with your stop loss right back up here. Okay, same thing. It's like a staircase going down right now. Just because it plunged doesn't mean it can't drop more. Something major is going on with a reversal in the market here. At some point, it'll stop dropping and breaking support, but right now it's a downtrend with a small support level. So if we go to 4-hour candles, even 1-day candles, this is a pretty major support that it already is trying to break or already broke. Okay, you see the wick. Oh no, that's not a wick. That's a, let me get rid of that. That's a vertical line. There we go. So it's testing this support. Look what happens if it breaks this support level. It's a 1-day candle support level way back here. So if this gets broken down here, you could see a large plunge. Okay, so putting a sell stop below this support level we just saw on the 1-day candles is a pretty significant support level way back on the 1-day candles. If it breaks through here, that could be a rapid drop again. You could take a shot at it with then this becoming resistance if it breaks through, and your stop loss could just be a small risk. Now, with that said, purely technical trader might say, hey, if this goes above this high point, then that's an uptrend, I'll buy. Okay, here's resistance here. Resistance, resistance. If this movement breaks above that resistance, you could have a buy stop waiting with a small risk back down here to your stop loss, waiting to trade up maybe to see if it'll retrace this big drop back up to the next resistance level. So if it breaks through this small resistance, you have a much larger potential profit if it retraces this plunge compared to what you're risking back below that resistance. Okay, so I don't see any problem with setting up a buy stop up here with a small risk back down and a sell stop down here with a small risk back up. If it makes another move like this one on either a breakthrough up or a breakthrough down, that's a huge potential profit with a small risk. Imagine you were already doing that today each time it formed support. Look how many times you could have won this week ever since this gap. Okay, any questions on that? I would always, very good question. I would always be careful with pending orders through the weekend. Always. I'm looking at much smaller exposure percentages, meaning smaller trade sizes, if I'm carrying through the weekend on something like what we're looking at here. Look at the gap that happened this weekend. Look at this gap. Imagine you were selling and you had your stop loss right here, right? Imagine you were selling just before the weekend and your stop loss, you thought, oh, I'll just put it right up here above this little resistance. Boom, it gapped up here. Guess what? You didn't just lose to your stop loss. When the market opened way up here, you lost all the way to here. Much more maybe than you intended, right? So you have to be aware that through the weekend, there could be really big news. And if that news is big enough to cause a really big gap like we see here from last weekend, if that gap works against you, if it works for you, great, you could have a big profit. But if it works against you, that's quite a risk if you had a large position compared to your balance size. So maybe Monday through Thursday, you're carrying trades of maybe a larger trade size through the night. But when you're talking about carrying through the weekend, maybe you're more careful. Maybe you have smaller exposure percentages because of that risk of larger gaps through the weekend. Very good question. When I say small risk, I mean percentage-wise on your balance. By having a stop loss that doesn't have to be very far away to get past the support or resistance level, it's a lower risk percentage-wise on your balance because the distance to the stop loss is smaller. So it's a lower risk for any given trade size because the stop loss can be closer to get to the other side of the support or resistance. But with that said, I always like the idea of putting my stop loss past 2 price levels. Okay, and so what do I mean by 2 price levels? I would say, let's say that this breaks through and your buy stop triggers here. Then I like to have my stop loss not just below the 1 support level, but below the 2nd one. So that if it comes back and tests a little bit before going further, my stop loss wasn't just below 1 price level, but below 2. And the same with the downward movement. If it breaks through and hits my sell stop down here, I like my stop loss not just to be back above that 1 level, but my stop loss is above 2 levels. Okay, and to be able to do that but still not risk more money, you just take a smaller trade size. Okay, you take a smaller trade size, then you can, what I call, widen the strike zone. We talk about that a lot in the webinars, that by taking a smaller exposure, meaning smaller trade size, smaller exposure per point, then you can have your stop loss more points away, thereby allowing the trade to be more patient and not get to the stop loss so quick, right? If you're using a stop loss. Not everyone uses a stop loss. I think most people do, but there are strategies where you don't need a stop loss, right? Maybe you put AvaProtect on a move, or you have a hedge trade waiting, or you have some other way you're risk managing, which is okay also. So I see this as a small ranging movement here, and a breakthrough one way. If you get in, to be patient, you could put your stop loss below 2 price levels, or a breakthrough the other way, same thing. And that's a very good question and a very good point. Olakunle, I think the audio is on your side. I think you just got to check your setup, because most everybody's had good audio all the way through. Okay, so let's maybe take a look at the dollar index. I think it's been interesting of late. In general, lately, the US dollar index has strengthened when there's more fear on the market. Okay, it's been kind of, the US dollar has been treated kind of like a safe haven currency of late. Meaning, as fear has gone up, the US dollar has strengthened against, as a basket against other currencies. Okay, and the US dollar index is paired against the euro, GBP, Swiss franc, some other pairings to create this US dollar index. So it's kind of balanced across different currencies to make it more stable, maybe more predictable in that sense than a single currency pairing. Now, we've also seen the US dollar index weakening as there's been good economic news. The US dollar's kind of been weakening. Doesn't mean that has to continue as we go forward, but that's been the general trend. And so we look at the 1 hour candles and we can see, okay, the movement's trying to decide which direction to go right now. That's what it looks like to me. And if we look at 4 hour candles, then we say, okay, there's a resistance level right about here. Resistance, resistance, drop off, resistance, drop off. And so and you see if you go back further, resistance, resistance, way back here, also resistance, okay? And then it was support before that. So I see a major price level as if this movement breaks above 97.6, you can see that a buy stop pending order up here might make sense, technically speaking. A buy stop pending order above this resistance, it would take some strong momentum to get the US dollar index above this level, and then the next resistance level isn't until way up here on the 4 hour candles, until way up here. So if you get a breakthrough on this resistance level, which has been there for some time on the 4 hour candles, that could be a significant potential move up to the next resistance level. And at the same time, if you think the US dollar might weaken, well, you've got a nice resistance level here. At some point, you could decide to either make a market move or to put a pending order somewhere below this resistance to sell on the dollar index. Okay, since there's a little bit of fear hitting the market today, I think we could possibly see the US dollar test this resistance level today. I think it could test this resistance today and maybe even break it, right? So, but it depends. There's some announcements that came in, and that could affect things. Let's take a look at some of the numbers that came in and see what could be happening with those. So if we go to just the main page on investing.com, click on economic calendar, we can see some numbers that came in out of the US. It's the same as everything else today, mixed. The core number, PCE price index, lower than expected. Month over month, year over year, better than expected. Personal income declined less than expected, which is good news. Personal spending went up less than expected, which is bad news. So a slew of announcements, and at the end of the day, everything kind of feels the same, kind of mixed, bouncing around, looking for direction. Okay, and so with that type of news, that support and resistance levels tend to hold and give good bounces when there's not big breaking news one direction or another. So if we take that then to the technical analysis, a pending sell limit, that if the US dollar index hits this resistance, to sell off that resistance might make sense. Okay, and if it breaks through, you still could have your pending buy stop up here in case it breaks through, in case there's some unexpected breaking news that causes the US dollar index to strengthen. You could be ready for it with a backup second pending order here. So you could have a sell limit at the resistance and a buy stop if it breaks through, with stop loss on the sell limit up here and stop loss on the buy stop down here potentially as one option to set things up on the dollar index. Okay, again, not trying to guess the direction, using technical analysis, which again is the point of this webinar, to identify advantageous entry points and looking for ways to limit your risk while hopefully maximizing the potential profit. Okay. All right, so I think this is a good place to stop today. We've been going for about 40 minutes. We'll have a session going Monday evening time, 6 p.m. UK time. All of you are welcome to attend if it fits your schedule. Otherwise, you can check out the recording. By the next business day, the recording should be uploaded on Tuesday to take a look at what we looked at. So good luck with your trades through the rest of the day. Everybody have a good weekend. Just be careful with any pending orders and with any market moves that you do that you'll have open running to the end of the day today. Be careful carrying them through the weekend. And if you're going to, just understand your exposure per point movement on the chart and make sure it makes sense to you if you're carrying things through the weekend, okay? All right, thanks everybody. Bye for now.